Good evening, Manoj. How are you?
I'm good, Mukund. How are you?
I'm very good. How was your week?
It was terrible. I was long, as I said last time, that so I had nibbled into Dow Jones long, which held on pretty much for the first few days of the week. Then yesterday and today was terrible. So of course I made some money, but then I made a mistake of holding on yesterday, and that's what cost me kind of 2% drawdown today. So let's see how it goes now. I mean, of course, I had to cut loss, and I've entered again today, which is in the money, but I'm not going to carry it forward for a very long time. Maybe exit on Monday.
Yeah, so I had some very good trades. Today was not great, but I had a few shorts. But they're just day trades,
Yeah.
not more than a day. Within
Okay.
the day, in the day, out the day, a bunch of shorts. Meta I shorted, Shop I shorted a few. They turned to be good. Some of the earnings were very, very good.
Mm-hmm.
And I'm disappointed that I didn't, although I expected them to do very, very well, I didn't
Right.
really take large positions, which was okay. But let me just do a quick summary from last week's earnings. We had a bunch of earnings last week, close to about 14 companies that I was tracking. I had mentioned to you guys. But the companies that did really well, Monday.com, MNDY is the ticker symbol, really, really good earnings. I think this is a stock that you should put in your watch list. I think this is a company that will continue to do well. I think Monday, off of its lows of 70, this thing is going nearly at 130. Really strong earnings.
Wow.
Good news
Okay.
from Monday.com.
Mm-hmm.
Also, another company that had good earnings was Bill.com today. It actually, last night after earnings, it went down quite a bit, about 4 or 5%. And then today it went up and then went some more, went up 10% up.
Mm-hmm.
DLO, which was on the watch list. So DLO is an interesting company. About 2 months ago, one of the short analyst firms put a short on DLO.
Mm-hmm.
The stock went from 60
Oh.
to something to 10.
Mm-hmm.
And I bought it around the 10s and I sold it at 13, thinking, okay, all right, this is not going to go far. Today it went up to 20.
I just saw the chart. It's amazing.
20,
24.
Manoj.
Wow.
Yeah. I knew this was a good company. I'm not sure why I didn't hold it.
Yeah.
Another couple of good earnings. Palo Alto Networks reported earnings today after hours. Good earnings, good guidance. There was a lot more drama about Palo Alto earnings, but they were showing some demos of product. Seems okay. The
Mm-hmm.
stock will do okay. I think they had about 10% lift after earnings. And then Walmart did very, very well. Very good earnings from Walmart. Another one,
Okay.
the sixth on the list is Cava. Cava is a restaurant company,
Yeah,
Mediterranean.
recently listed one.
Yeah. And then not so good earnings from Fetch, FTCH, Rumble, and then Target. Target, I thought was really poor. I think overall, if you look at it, some of the retailers, discount retailers are doing well, which is reflection of the economy. Customers are a little bit stretched right now, I think, or we're getting to the point where it's getting stretched. And sometime next month, September, October is when even the student loans start to get repaid, right?
Yeah. Yeah.
So this is going to be it's going to be interesting to see nonetheless.
Great.
So let's have a quick rundown of the summary from last week in terms of our key indices, starting with
Sure.
SPY and DIA and everybody else. How did we
Sure.
do? I know we went down.
Of course, we know it went down. Uh, in terms of the expectation wise, yes, it went all the way to the weekly 20 EMA or 20 SMA, whatever you want to call it as. Although I did not expect it to be so fast. Honestly, I'm very much surprised the way it fell this entire week. I thought that it will come down maybe next week, but not this week. But I was, completely taken aback by the pace of it. There is something that, um, give me 1 second. Let me just, bring my all
The weekly chart. So for the last
drawings.
2 weeks we've been down, but last week was really really wrong.
So the double top and those channels which worked, and then breakdown, of course. This is the weekly chart and this is the daily chart. So there was a double top, then there was a breakdown of 4-hour channel and then the daily channel. And those channel breakdowns actually exacerbated the pace of the sell-off. Yesterday and today and day before yesterday was completely out of question. I mean, I did not even expect that in the last 2 days, and today, of course, it bounced back later after the day. But yesterday and day before yesterday, I did not expect it to be so sharp. So it's again proves that the way market, sometimes people want to say that, technicals do not work, trend lines do not work, MEs do not work. But here we have the example of the MEs and the trend lines and the technicals. So definitely it worked. Each time there were channels and it broke down, it gave ways to the, on the low side, it broke down and gave way to the low side. Many times these breakdowns also result into back tests as well. So this breakdown might result into a back test, and that is where the real test of the bulls would be. Real test here as well, because it is, if this is so, this bull run wants to continue, and this is the place where it should result into a sharp bounce. This bounce should actually go and should breach the this double top which is there. If it doesn't, and then we probably somewhere around here we should be coming back down again after 4450. But I don't know if it is going to bounce and if it is going to come down again. But so far it should result into some back test of the breakdown, which should be somewhere around here. So maybe 20-50 MA, so 50 MA should be tested again around 4440, 4450, and from there we would really have a test for the bulls, whether it wants to go up or wants to come back down and again break the 20 EMA on the weekly as well. That's for the years. I mean, SPY.
Manoj.
Yep.
When do you draw a channel versus when do you just draw lines?
Okay, so normally what I do is I normally prefer drawing a channel. So let me just take you to this chart, which is crude oil. Okay, so I had this particular wedge drawn on 4-hour charts. It continued to move in this direction for a very long time, from June till August. It will continue to move. So from 4-hour, it moved to the daily, and the chart seemed very sharp. So I thought, let me just see if it results into going into a channelized formation. And there you are. Give me 1 second. Here you are. See? So where exactly is the bounce? The bounce is just exactly at the channel. So normally what I have observed is wedges, whenever there is a wedge, say rising wedge or a falling wedge, it ends up turning back from the channel. So channel is when it is parallel and parallel rising from the upper end or the lower end of the trend lines of the channel. Most of the times I prefer going for the wedge, because that wedge breakdown or breakout gives me an opportunity to short or long. But after that, I don't carry it forward, because there is always an opportunity of two things: channel as well as backtest. When the backtest happens, there will be a sharper bounce. At the same time, if there is a channel, definitely there will be a sharper bounce. And hence, I always cut down my longs or short after a particular point whenever wedges break down or wedges break out. So I start with the wedge and then moving to the channel.
Got it. Okay. Let's go to the next one.
Yep. Here we are.
QQQ.
Yep. Give me 1 second. Again, another key sign that where do we see the bounces? The bounces are exactly at the lower end of the channel. Let me just hide those small 15-minute and hourly chart drawings that that's not required here. So the daily chart exactly at the upper lower end of the channel, and weekly chart exactly above the 20 EMA. So this is not a surprise. I mean, many times people still keep asking why technicals don't work, but here you are. Whether you take weekly, whether you take daily, whether you take 4-hour, there is some kind of a support, some kind of a moving averages working here in favor of bulls or bears. So where did we stop, or where did we kind of stall? Exactly at the 20 EMA and exactly at the lower end of the channel. Whether market bounces sharply or sustains or dilly-dallies, that will decide whether what market wants to do further. If market wants to rally and give a sharp bounce, then definitely this bull market has some more legs. But if it sustains kind of dilly-dallies for next couple of days or maybe 3-4 days or a week, then you really have to ask yourself whether you want to get into longs or just move out of your longs.
The question I have also now is that when you look at this, when you look at the channel, whether it's the weekly or on the daily, right?
Mm-hmm.
One of the things that strikes me is very interesting is you could also draw a small channel. What if some of the points go a little bit outside of the channel in some cases?
Many times it would so happen. So for example, here in case, it just dropped below the channel and then bounced sharply back the same day. So there will be those aberrations where market actually gives that So normally the way I decide is it should close below the channel. It should not just result into going below the channel and then bouncing back. That wick doesn't count if it doesn't close below the channel, if it doesn't close below the wedge, if it doesn't close below the trend line support or trend line resistance. So unless and until it is a close above or below the trend line, I would not call it as a breakout or a breakdown.
Yeah.
Another key important point that I actually spoke in the last call as well, that I follow trend following. And what is the trend following? Two important things that comes very crucial in trend following. One is the breakdown of 20 versus 50 MA. I mean, when 20 MA crosses past the 50 MA. And second is making a new higher high or making a new lower low. That would decide whether the trend is going up or going down. So the key pivot here was this one, which was lower high of 15109 on QQQ or maybe NVDA, and we broke below it. Basically, one key aspect of trend following, which is trend changing to the downside, has been broken. Now, second key channel will be this particular moving averages crossing over to the downside. So one and
all the
two,
moving averages seem to be going lower now, turning lower.
Yeah, they are turning lower. It should result into the crossover. So it will come back. It should result into a bounce back. But when it doesn't cross past this 2050 MA, that's a third signal and the final signal. And yes, market wants to go further lower. So all those who follow trend following, they would actually be entering their short somewhere here. Even if they weren't short all this while, they would be entering their short somewhere here between the 2050 MA convergence.
It's got some ways to go down, Manoj. I think it's going to go down a little bit more.
Let's see how it goes. I mean, I don't want to enter into the prediction because I had failed last time, so I don't want to. Okay.
This chart, right? When I look at this chart, I don't see a channel. I see more like a band. It's going within bands.
Yeah, give me 1 second. Where are my trend lines? Okay. So it's actually a rising wedge. So in this case as well, so you were talking about what if it crosses past. So in this case, it actually crossed, but it couldn't sustain the above this particular line and then again came down, right? Similarly, one very key thing that I want to talk about is the reason I have actually entered into long here is this.
Oh, head and shoulders.
Yeah, and just head and shoulders.
No neckline.
Here is a neckline. Yep. So I have entered long somewhere around here. I'm still holding, and I actually was waiting for the breakout. It didn't break out, and then again it came down. So my stop loss is somewhere around here. If it falls back low, I would exit the long that I'm holding from today. But since it is on the 15-minute chart, it doesn't give me a good confidence enough to hold on for maybe more than 2 days. Maybe Monday is when I should be exiting, or maybe Sunday evening when markets open, the futures open, I would exit my longs in case it gives me a good enough bounce. But so far, based on the daily chart, it's close to the lower end of the wedge. So again, some bounce, but I don't know if it would result into a very healthy bounce for a very long time, because rising wedge is a bearish sign. It's not a healthy sign. So I wouldn't be holding it for a very long time. Maybe 200, 200, 300 points on Sunday evening or maybe Monday morning, and then after that I would exit the longs if I have. I mean, of course I have, but if somebody else is there, they should be exiting somewhere around here if it results to a bound of 200-300 points. So that's Dow Jones.
Okay.
And
you don't even want to go to. I don't even want to go to IWM, man. The weakest of the
God. Just sharp the bounce. Similar sharp is the follow. I mean, this is terrible. From any angle, it doesn't give me any confidence of continuing to hold small caps. Now, this is the key criteria for anyone to decide whether this bull market or this so-called bull market has ended, or the bear market, which was there for last year, has again resumed. I would say probably this bull market has ended for a very key reason is the small caps have given up completely. This sharp bounce and sharp sell-off is not a healthy sign. Again, it can result into some more bounce because it's a small double bottom here. But this would again bounce somewhere around here. Then 2050 MA would again result into some breakdown.
It's got a retest.
I'm sorry, what? Yeah, weakest.
Retest.
Yeah, retest of the breakdown, retest of the 2050 MAs, and
It
then
also looks
this is
like
what happens.
on the daily chart, it looks like a double top, right? Actually, multiple
Double
top.
top, yeah. So double top happened here. This is where the double top happened, and double bottom is somewhere
Triple
around
top.
here. I'm
Yeah.
not confident holding all IWM as well.
All right.
Yep,
That's how we're doing with that one.
yep. So you want to go back to earnings now?
Want to go back to earnings. For next week, the most important earnings everybody is looking forward to is Nvidia. And of course, a lot of people are also watching Snowflake, but Nvidia is the big one. I think more than anything else, it has been literally the only leading company during this after all the big Magnificent Seven reported earnings. It's the only one left. Meta, after earnings, has been trending down. Google broke down a little bit today. Amazon has already broken down. Apple has gone down a little bit, almost about 10 points from the
Can you just
180s.
share the chart of NVIDIA? Let's see what it says.
And then Microsoft is down. So everybody is hoping Nvidia just saves the day.
Yeah, bulls should be actually hoping that if NVIDIA can save them. So it's a bull flag. And from the daily chart perspective, it does give some confidence because even if it broke down of the 50 MA, it bounced back sharply and it is still holding above the 50 MA. It bounced back above the 20 MA as well, but again, then gave back on 20 MA. So bulls should have some confidence as long as this bull flag holds. If it breaks down of the bull flag and the bull flag gives way after the earnings, then God save the bulls. You know what will happen next. I don't need to speak about it.
Interestingly, if you look at the daily chart,
Yep.
although the ATR, the average true range is about $7-8, it looks very, very small on this chart, right?
Mhm. Second. Oops. Give me 1 second. I need to remove some of the. Here you are. Oh, wow. It is still high. So ATR after that sharp bounce, it is still high.
So it's okay right now. NVDA is still bullish until something happens.
Yep. And that something is, of course, earnings.
Yeah, and earnings is on 23rd, so
Wow.
middle of the week. So it's a bit, I think until 23rd, I don't see any reason for the market to go up, but then again, that's me. And then
Right.
the second earnings is Snowflake. Snowflake, actually, the interesting part about this chart, and I was looking at it, was okay. Now let me. Oh yeah, this is the same thing I drew. So walk me through this chart. This is well, there I see a double top on Snowflake, so I saw that. I actually drew it down, coming down to the 140 range.
So you're talking about a
Top of
wedge.
140.
So this is a daily chart in front of me, and this is actually a double bottom somewhere around 142. So I see a double bottom here at 142, 142.60. And if I draw a 4-hour chart or maybe hourly chart, this would result into some kind of a wedge kind of a formation. Hourlies and 4 hourlies normally do not. I mean, 4 hour can still give you a good enough bounce, but hourly charts normally doesn't result into too much of a bounce. It results into a bounce and then gives into a failure. So this is actually a falling wedge on the hourly chart, may result into a bounce somewhere around here or maybe around here, and then it would fail down.
Yeah, so if you go back to the daily chart, it should be bouncing off of 140s is what I felt.
Yeah, so and this is what actually did. So today it bounced off of that particular low. 142 is where it created a double bottom, and it is at what closed at 147.
This is going to be an interesting stock to watch.
Okay.
I think it has been if you look at it from a long-term perspective, go to a 5-year horizon all chart. It has been, look at that. As some of the people call it, as a mountain chart. Double top all the way on a 5-year, and then
Right.
steady decline. And then after that, it's been pretty range bound between
Right.
40 range, 120 range, and the 160, 200 range.
So almost last 1.5 years, it's
Yep.
been stuck into this 200 and 140 range.
Yeah, it's gone nowhere.
Yep.
Well, technically nowhere, but 140 to 200 is a big range.
And so, I mean, Elliott wave analysis will give you say it's a A, B, C kind of a thing, but I would say it's a consolidation happening. And it's about time it breaks out or breaks down of the consolidation. We'll see what it does when it does.
Yeah, no, I think the longer, so I think Snowflake is one of those companies where it came out with a very high valuation during a time when valuations were very, very easy to come by.
Yeah.
And it
Majorly when-
rocketed up very quickly. This was during just 2021, 2020.
Yeah.
Valuations were rich for all of these kinds of companies, and Snowflake is a very solid company. Now it's just chewing up its valuation to get ahead. The
Right.
company is going to do about 2 billion, still growing at 40%, 45% year over year in terms of revenue. We'll end up at 2 billion this year. So 2 billion, you're looking at about roughly in the range of about 60 billion. Is that the market cap? What is the market cap for this? Is it 60 billion, 65 billion?
Let me find out. I haven't looked at it. I mean, I don't know how to look into it because I haven't ever seen it. It will show me. Let me see if it shows here market cap.
Snowflake is, and it's just coming up, it's 48 billion, 50 billion.
Yeah, 40 billion, somewhere around like that. 44 billion.
It's 50 billion. It's about 50 billion right now. 48 billion is what it said for me. So 50 billion, let's say $50 billion and 2 billion, 25 times sales, next year sales.
Wow.
At 45%. So it's a richly valued company. 147 is not bad, but it better continue to. So it's going to be an important earnings, I think, overall.
Okay.
The other two earnings that are interesting, not as frequently, but it was a great company at one point in time. Everybody followed it, Zoom and Affirm. Affirm is a very popular Twitter stock.
Yeah.
Everybody loves Affirm, but Zoom off of its very, very peak highs, it was a COVID stock.
I still remember when I think the lockdowns and all were lifted and the stock started falling after earnings, and I had a debate in one of the groups and WhatsApp group that we had lined in the early days. I said very clearly that there will be a time when the stock will not even be talked about. And this was when it was 400, 500 kind of a stock, and when it had actually already halved. And I told them very clearly that it won't even be 200, and here we are. And this was not based on technical. This was very purely based on what we understand of what we know of the market. This was a thematic stock for a particular period of time, and after that, that bazooka, that euphoria is gone. I don't think it's going back to those levels or those 400, 800 levels. I mean, this falling wedge might result into a breakdown. Stock might go up to maybe 100, 120 kind of a level whenever it wants to, whenever it breaks out. But forget about those 400, 800 zone again.
Yeah, no, totally. I understand. And then the interesting part is the last stock is Affirm. Let's look at Affirm really quick.
Yep. Similar chart, which is a falling wedge, but a long time. I don't think it's coming out of this falling wedge so soon, and has a long time to go. For maybe around, it'll go back in single digits again, and then again try to bounce back. As of now, it has no breakout kind of a scenario for the stock. So one of those loved stock which has become unloved now.
If you look at the daily chart for a year, it seems like it's in a range bound situation, right? That's what I saw.
Yep.
It's very range bound.
Daily chart for the year.
For last 1 year. Between the lows, when I charted it, it was going anywhere between the lows of $8.20 all the way up to $18, $19. So it's got an 8 to 19 kind of a range. But
Yep.
I saw a double top as well. If you look at the right hand corner, you see a double top.
Right. Yep. It's not bullish, definitely not.
That's good support in the 13-14 range. 1371 range. It has good support.
So 1280, 1290 is a support. 1330, 1340 is.
And ton of resistance in the 19 range.
Right. So I don't think it's breaking out as of now, especially given that it's already past its 2050 MEs. So I'm not bullish on the stock. I won't be so far now.
Awesome, Manoj. That was it.
Okay. It was good.
Have a very good week. Have a good weekend as well. And I'll talk to you guys. The rest of you guys who are watching the video, please subscribe. Please follow us, comment us. Manoj reads every comment. He sends me notes on every comment. He sends me a WhatsApp message saying we have to address this. So very good. Thank you very much.
Feel free to subscribe. Feel free to ask, and we are always there to help.
Thank you, Manoj. Take care. Bye.
Thank you, everyone. Bye-bye. Take care.